Hello, happy Friday, all. We are back for another episode of the Tech Behind FinTech. And today I am joined by the wonderful Joyce Mehlman. Nice to see you again.
Hello, it's nice to see you. It's been a while.
It's been a while. You are a returning guest. Our last episode that we did, it was awesome. It was the A to Z, the starting of FinTech. And today we're going to talk about now you started a FinTech, it's launched. How do you get a bank partner? I know it's something that a lot of FinTechs suffer from, and it's a whole process, and a lot of overhead, there's a lot of frustration in the industry. But before we jump into that, let me read Joyce's bio. She is the CEO of iLEX consulting group, and let's go through her bio so I can introduce everyone. Joyce is a banking professional of over 35 years of experience concentrated in operations, compliance, and project management. She's worked for banks of all sizes, both domestic and international, and across all areas and products. She has been working with startups since joining Bancorp Bank in 2006 as their COO. Her team supported operations, compliance, customer service, risk, new account openings, wire ACH processing, and fintech oversight for audit purposes. Excuse me, I had something there. Since leaving Bancorp Bank in 2011, Joyce has formed her own consulting company, iLEX Consulting Group, and has worked with over 15 programs in 5 banks, helping them launch programs and build out the oversight needed to support them. In addition, Joyce also mentors as part of QC FinTech and was named to the list of top 50 inspiring women in FinTech by the NYC FinTech Women Organization for 2019. Joyce, thanks for joining. I
You're
am
welcome.
suffering. I have excuse me. Um, that's what I get for drinking like all this healthy concoctions. Like I have like beets and lemon and all it's great in like theory. That kind of gets like stuck in your throat. So that's
No
that's
problem.
what
You can gotta stick to the coffee like I have.
you know what? I think I'm gonna have to do that before show. So I was like the first time I almost like died reading a bio. Like eyes were watering. It's like crazy. But yeah, so before we matter of fact, excuse me 1 second. I'm gonna go offline and I'm gonna come right back. Sorry about that, Joyce. Had to kind of fix myself, kind of things almost went a little bit left there. Now that we're back, see, and that's like the beauty of like a live show. Like you just never know what
Well,
the
I was
hell.
gonna say, so you can see him in my house behind me. So please ignore like dogs walking, barking, workmen. Like I can't always guarantee what's gonna be happening behind me. Yeah.
All good. If I can like barely like choke and have eyes watering workmen, that's not a problem at all. Okay. Let's as you know with the show, we are the Tech Behind FinTech. We talk about the technology behind the money. Sometimes we get into also just FinTech topics that are hot. So before we jump into our main topic, which is how to get a bank partner, we're going to talk
Yep.
about a relevant news article that we saw during the week that we found interesting that we want to get Joyce's opinion on. So, what are we going to talk about right now? We add that to the screen. We have our wonderful PowerPoint. So, criminals love buy now, pay later.
Mm.
Basically, it's an article that came out how fraudsters exploit popular interest-free payment plans. So, what's buy now, pay later? So, essentially, you have different startup companies like, let me get some names correctly: Klarna, After,
Honor, affirm,
Affirm, Afterpay, and
Afterpay.
essentially they set up agreements with the merchant and people can buy items from the merchant but pay in increments, so it's not
Hmm.
one lump sum payment. So that's like a
Yeah, it's the
huge
Best Buy model, right? It's what Best Buy's been doing forever, right? You go to the register, you sign up for their interest-free credit card, right? You can buy it now and pay it out over time without interest unless you go past that duration of time, and then you start paying interest on it, and it backdates to the very first day, right? And so this is a new model of that model, not using a credit card, right? Just using more of a lending tool.
So, and what's been happening is fraudsters and are taking advantage of that. So through identity theft. So the credit check that you would have to go for a normal loan and go through the process is not as detailed in this situation. So you have identity theft, you have people applying and getting these small ticket items, whether it's PlayStations at bulk or even food and whatever, and
Mhm.
basically not paying the full amount, paying maybe the 25% initial payment or less, but not paying the full amount. So that seems to be something that's really plaguing this industry. Let me just let's read an example. So, for example, a partner merchant may run a special promotion event for alcohol, but assign a vague category like special event. This runs the risk of fraud falling through the cracks if an artificial intelligence system doesn't recognize the category and gives it a more generic label with a low default risk. So essentially, just want to kind of touch base on that. Joyce, what's your opinion? What you've seen in the industry?
I mean, the big thing we're seeing right now, and how the risk with this is account takeover, right? And fraud around either the person taking over someone's identity, applying for the account, getting the buy now, pay later product, doing, like you said, paying the minimum front, and then just never paying again, right? Walking away. And, they're not the person on the hook at the end of the day. It's not their credit that's being impacted by it. It's the person's identity they took over. That person ultimately is going to get collection notices. They're not going to know why. The merchant ends up being out the money in most cases. And the fraudster walks away with whatever merchandise they have without paying for it. It's a hit on the fintech. If it's a fintech in the middle, it's a hit on the merchant if they can't get their funds back, which they won't be able to. And the banks that are in the middle of this have to report these losses, so it's a hit on them as well, because no regulator wants to see an extensive amount of losses on their books due to lending through their partners, right? So that's a really big one. The other one is just getting a hold of someone's, if it's a card related buy now, pay later, getting a hold of someone's card information and spending on it. And again, doing the same thing, just walking away from it, right? So fraud in general is just, it's huge. It's become the biggest issue with everything in banking today, but this is just there aren't a lot of controls around it. Like you said, they don't do the level of credit checks that they would do on a typical loan, especially with a brick and mortar type bank. So in some cases, there's a fintech that's offering this. They're partnering with someone like a firm or Klarna in the back end, or they've built it out themselves, or they have another lending product behind them they're partnering with, and they're the one offering it to their customers. The fraud that is related to that becomes a loss to the fintech, right? If the fintech has allowed someone on their books that's fraudulent, if the payments go south and they can't get their money back, but they've already paid the merchant because they pay up front and then they get paid back by that customer, then they're out the money. Again, it impacts the fintech, it impacts the bank they work with. The merchant in this case is okay, but the rest of the parties are out the loss. Banks don't like to see that on their fintech partners because it impacts the sustainability, right? They don't like to see a lot of losses, because if they do have them, then that's money they could be using to keep themselves in market, pay their bills, do things like that, right? And they have to keep more on reserves then, which is money that the fintech has to tie up that they can't use for other products and features that they want to deploy to their customers. So until we get better controls in place, this is going to be a bigger issue. The whole thing behind buy now, pay later and small scale is we don't do credit checks. We report to credit if it's a credit builder type product. But again, if it's an account takeover or identity theft, they can report to the credit bureau that it was non-paid, but not going to impact the fraudster. It's going to impact the person whose identity was taken, right? And they have a whole issue there with getting their credit back.
And one quick note, like during holiday seasons, obviously next week is a
It's
huge
much worse.
retail. Merchants usually even lower their
Yep.
standards because they don't want to impact the transactions, because that's the biggest time for sales.
Yep.
And they're buying. So it's definitely something to look out for. So, you know, as always, we touch base on these news articles briefly, just to stay because it's relevant, obviously. And
Yeah,
now,
and I
yeah,
would just
I'm
say in
sorry.
general, anybody that's working in this space, you really need to have the right fraud detection, oversight processes, and systems in place. You need to make sure that you know who you're working with, right? Make sure your identity confirmations are really up to par, and make sure you understand what you're getting yourself into and what that collections looks like. Have a collections process in place. A lot of programs don't, and all of a sudden they start having these non-payments and they're sending text messages and they're being ignored or they're going nowhere. Like, you need to be working with a partner that does collections as a business, and you need to know that you're going to have to keep reserves against this.
That's awesome. That's awesome advice, especially like one of the major areas of fintech right now is lending, and this obviously is a form of lending. So
Yep.
that advice is right on time. All right, moving on to our topic of the day. You know, like we had Joyce on a few months ago, and we talked about the A to Z to launching of fintech. So now we assume you launched. One of the critical pieces now, what we're seeing is establishing that bank partner relationship. So I just want to kind of talk to you, Joyce. What challenges that are you seeing? What ways can a fintech mitigate those challenges and just that pathway? And let's just get into it.
Yeah, so we're going to take a step back for a second. So we did the A to Z, and you haven't quite launched yet when you're looking for your banking partner. You're still in that phase of getting to the point where you're going to market. You may have identified all the other vendors you need, your processor, your KYC vendor, your fraud detection vendor, all that good stuff. But the bank partner is one of the what we call the critical triangle pieces. So you've got like this triangle, and this is the fintech up here, and then you've got your bank and your processor, right? And those three become the core of everything you do. So it's really important that you pick, like we said originally, the right partners in both of those spaces. Everybody else is kind of ancillary, and we want you to have the best partners, but they're easier to interchange. Moving off of a bank or a processor is it is a tremendous effort, and it's something you don't want to do unless you have to. So you want
Mm,
to make sure you have the right partners up front. When you're going and looking at a processor and a bank, you almost want to look at them together, because a lot of processors only work with certain banks, and a lot of banks don't like some of the processors out there. So it's kind of this dating game where you're trying to find the right bank, the right processor that fits your needs that you can fit in the middle of, right? There are some processors that are more agnostic, and they'll work with almost any bank out there. And there are some that are very specific because they're more of that banking as a service model, and they only have one or two banks that are behind their technology, right? So we talked a little bit about process, and we can get into that a little bit more later on in the call if we have time. But for the bank, it's what we tell everybody is your banking partner needs to be a partner, literally that. It's not another vendor that you pay a bill to every month, and that is the only time you ever talk to them, right? This banking partner not only has oversight responsibilities for everything that you do, that is your face and your voice to the regulators, but they are also the component that is going to allow you to grow and morph into what you want to be, or prevent you from doing that, which obviously is a huge issue in the market if you can't get into the space you ultimately want to be in because the bank isn't comfortable, or that's not what they signed up for, or they don't want to undertake a new offering, right? So having a bank that's in this space that wants to do it because they want to be a partner with these fintechs is super important. Most banks are in the space for that reason. There are some banks that are in the space to make money, and that's fine, but that's not who we would recommend you work with. Unless you've got a plain vanilla program that you're never planning on changing, a bank that's in it just for the income is not going to be the right partner for you. They're never going to be able to have a seat at the table with you to have that discussion about, I want to do buy now, pay later. What does that look like? Right? No, we don't do that. We are not comfortable with that, and none of our programs do that today, and it doesn't fit into our box. And so, nope, we won't be able to do that as a partner with you, right? Those are the types of conversations we're trying to avoid. So when we work with our fintech partners and we are bringing them to banks, the first thing we do is understand what their business model is. What is the product they're trying to bring to market? What does their roadmap look like? What type of funding do they have behind them? Do they have an app built already or not, or a website built? Do they have a team behind them that is already working on getting this done? Because banks look for very specific things when they're looking at fintechs and whether or not they want to part with them. And again, every bank is different. Some banks really dig into the financials. What kind of investments do you have? How much money do you have? What does your run rate look like? Are you going to be sustainable? When is your next round going to be? Right? How do you plan on making money? Where could your losses be? Right? That's where they key in on. And especially on the credit or lending side, that is key, right? Other banks are more about what types of products are you offering? Do we support that today? Is it something we're looking to get into and it's on our roadmap? Who is your processor? Do we work with them? Are we comfortable with the policies that you have or that you're working on? Do you have a team, or is it just you? And then, we're going to start with you, and then you're first going to have to go out and find like a technology partner, employee, whatever, CTO, who's going to build this out for you. You don't even have an app today, right? So how early in the phases are you? Are you really just seed round? Are you, past that and are ready to actually sign all your contracts and get to market within 3 to 4 to 5 months, right? So all of those, all that criteria comes into play when we look at the banks that we bring to the table. Once we know that and we understand the product that the fintech is trying to offer and the space they want to be in, the market segment they want to be in, how much in the decision-making process they want to be, then we go back to the banks that we partner with today or we know of in the space, even if we're not partnering with them today, that could potentially fit the needs for that program and start making those introductions, right? And it's a courtship. It really is. It's a dating process.
You mentioned something. You said you wouldn't recommend a bank that's in it for the money, but aren't all banks in it for the money for the most part?
So yes, I mean, every bank obviously wants to make money on this, or they're not going to be in it. But banks, like when you talk to banks that are first getting to the space, what I love to hear is we want to stay relevant. We want to make sure that we can still exist in 3 years. We understand the space. We want to be able to be a force in this space, right? These are the types of programs we really like. It fits our ethos, right? We are typically a B2B bank anyway, so business banking partners would be wonderful for us. And we would love to be able, like there are some banks we work with that actually take our partners' products and white label them out to their core customers. Because they don't want to build it, but they're partnering with people who have done it so well that they'll either white label it or they're actually introduce their partners to their core customers and say, hey, this product offers this. We don't do this as a core, but here's the link to their program. They're an extended family of our bank. Please feel free to sign up with them. Right.
So wait, we have a message from the audience. DE is here. So I said college friend Damian Earl. Thanks for watching. Always comments and questions are always welcome. We appreciate you guys watching. No, I mean that's really interesting. I mean, especially the relevant part. I could totally relate to that with previous banks that I've consulted with, and they don't want to become the next Blockbuster, right? They want to stay relevant. They want to bring on these new type of products and don't necessarily want to spend the time to build it in-house if one already exists. So totally understandable. The question I have for you now is, what about certain regulations? What about certain compliance issues and things like that the fintech needs to be prepared for in order to get that bank partnership? What is some of the stuff that you've seen?
Right. So again, every bank is a little different. There are some banks that will come to the table and say, we're, in our dating process. And as part of that, we want to see every policy you've ever written. Well, 99.9% of the programs that we work with haven't even started writing those yet. And if they're working with us, we don't start writing those until we know who the bank is, because every bank has different policies and procedures that they require from their fintechs, right? And even the ones that are the same across the different banks have different templates, different formats, different information that they want, right? So to write them and then have to rewrite them makes no sense. And, to be honest, if a bank can't, the way I look at it, and this is what we did at Bancorp, if we are not confident enough in you to know that we are going to be able to get to market with you based on your financials, the due diligence we did on the company, the products you're offering, the team that you have, right, then I probably shouldn't be talking to you. If we're comfortable with all of that, then we know the project to get you from signing a contract to market is all of these other pieces, right? And we know that we're going to have to write all our policies and procedures, and the bank is going to have to review them, and we're going to have to update them if they're not comfortable with them. And there's going to be this back and forth, and there's going to be compromises. And in some cases, the fintech may just have to say, okay, I accept it, because at the end of the day, it's the bank's reputation at risk, right? The same on the technology side and testing. It all happens during that implementation phase. A bank that makes you deliver all of that before they'll even say, yeah, I'll give you pricing, isn't going to be the best partner.
So
And there's a lot of banks out there that would disagree with me, but that's just my opinion.
what about the ones that require something like a SOC 2 order? Besides the policy itself, they actually require you to have certain things done, like PCI or SOC 2.
Right.
Can you?
And what we've seen most of the time is, because they know these fintechs aren't even in market yet, you can't get an audit like that done until you have data. They don't have any data yet. So usually what happens is it gets built into the post-launch timeline. And the first thing that they'll make a fintech do is a pen test, right? And that usually happens around launch, because that's just really, that doesn't do data. That's checking firewalls and, security and all of that, right? And they want to make sure that you're not leaving them open for a breach, right? Because that's the biggest issue a bank could ever have. So that's the first one. As far as SOC 2 or PCI, if you don't ever plan on holding card data on your database, you never need to be PCI compliant. That is the only reason why you would become PCI compliant. The processors that are in this space today have alternatives to doing that. You can use iframes, you can use mobile messaging, right? Where you don't, it's all passed through, you just become a pass through, but it's never on your database, right? And so PCI compliance is definitely something that's going to be determined by the program, really. And then as far as SOC 2, yes. I mean, if you are holding data of any sort, and you're holding names, address, social security numbers, date of birth, whatever that may be, that's personal data, right? That's PII. And you need to make sure that you have the right security in place. I always recommend SOC 2 audits, SOC 2 compliance and certifications. I usually try to get the banks to agree to let the program have about a year post-launch to get that done. They need the data, number one, to be able to do it with any kind of fashion that makes any sense. And number two, I mean, and I know you've seen this with SOC 2, once you start, you can't stop. Yeah. That audit starts, you can't put it on hold. So you have to be prepared to start that audit, have them do the review and respond to that within this certain amount of time, or you fail. And they're not cheap. I mean, you're looking at $15,000, $20,000 for one of these audits, right? So, you have to be, as a team, ready for you to be able to take that on. So we try to work with our banks so that they understand it's on the roadmap. It just needs to be scheduled in, and the IT team needs to be comfortable with it before they would undertake it. And most of if not all the banks we work with are fine with that.
Cool. I mean, that sounds totally reasonable. So, what are some other things then now? So we have that. One thing I like that you said, and maybe it could be a little bit misconception. Some fintechs may feel they have to have everything ready before getting a bank partner. But from what you're seeing examples in which you don't even necessarily have an app yet. You just have, okay, here's what we're building, not even a team. And when you mentioned team before, what have you seen to be the minimum roles filled for a team, before getting some type of relationship established?
So your founder or founders, right? And sometimes those founders are a combination of business, product, sales, and technology. And sometimes it's just one person who has a great idea, who can do the sales, understands the product they want to build, and that's it, right? We've programs we started with that actually were like that.
Really?
Yeah. Now they're too early on to bring to a bank at that point, but we'll work with them to help them get ready to move over into that next phase to get them to a bank, right? To get them in front of a bank. At a minimum, you want to know that you have your founders are fully vested in this. Like that they're here and they're here long term. The bank isn't going to start talking to someone and a week later they're gone, right? I mean, it happens, but that's you try to avoid that. Your technology lead, whether that's your CTO that you're hiring or a head of engineering or whatever you want to call that person, is critical. They want to know that you're going to be able to actually bring this to market. And the technology piece is probably the biggest side of that, right? And then the other side is compliance and operations, right? You understand what you need to do. You are capable of writing a policy for them and understanding what that policy means to you. Today, with our programs, that's where we step in. We are that compliance and operations arm. And so when they go and they're speaking with a bank, that's not an issue. We are their back office. We are doing all of that for them. They don't need to hire that person on staff today. That's something they can do as they're launching or post-launch. The one piece we don't step into, like I said, is the technology piece. And that is where you really need to have a head of engineering with you on those calls.
No, I mean that sounds perfectly reasonable. I mean, the whole point of fintech is financial technology, so right, it's
Yep.
in the word itself, right?
And
So
if the people that aren't working with an iLEX company type out there, then you need to know that you have someone on your team that understands the banking side. Like a lot of the fintechs that we start with are great marketing, understand the products, but come from other industries and don't understand banking, don't understand the oversight, the rules, regulations. That's a recipe for disaster when you get on the phone with the bank. If they say to you, well, what about disputes? And you go, what's that? Right? That obviously they're never going to sign a contract with you. So you want to have at least someone on the phone with you that has banking experience.
I mean, it totally makes sense. Because that's essentially what you're stepping in. You're their advocate.
Mhm.
You are. I used to watch this show. They used to come on, and it was it was $1 million matchmaker, and then she'll bring all these people to the table.
I remember that show.
Crazy, right? So, like, what you're describing, I mean, it's similar, right? Because like you're bringing the banks to the table, you're bringing
Yep.
the fintechs that need the relationships, and then you're mitigating. Saying, okay, here's what the steps that you need to take in order to get this relationship, and you're also vetting out the banks, like you said. If it's a certain bank that's in it for, maybe just pure money play, they may not be the right fit, but one that's willing to, okay, we're going to leverage this to augment our existing systems that we don't want
Right.
to build a better fit. And it's just really going through that period. What are some of the things that you've seen in terms of something that you mentioned earlier? You said once you have one, it's extremely hard now to get a new partner. So that sounds like something that you went through and you've seen. Can you describe that?
Yeah, so it's not getting the new partner. I mean, banks, you can move, you can find a new bank, especially once you're in market and they can see you have traction. Banks are probably more willing to work with you then than they are before you launch. It's moving from one bank to another that's hard because every card that you have in the market today, so your debit card, your credit card, whatever you have in your wallet on the back, it has the name of the bank that it was issued through. So if you leave that bank and you go to a different bank, you have to recard all your customers.
Interesting.
By recarding them, it's an entire reshipping and explain to the customers why. A lot of them get really nervous. Some of you will lose customers along the way. And then on top of that, it's expensive. Now all these cards that you have paid for and put out in the market have to be redone again. And the mailers and the envelopes and the postage and all of that, right? So and then you have to move all the funds for your customers that are sitting on that bank's books to a different bank, right? And that in itself isn't as easy as just creating a wire transfer. I mean, technically to move the money, yeah, it's a wire transfer. But underneath that, getting the customers to understand that their routing number is going to change. So if they have direct deposits from payroll, they have to change those. So the impact to the customer is really big.
It's an interesting stat that I came across in preparing for this episode. It said about 70% of fintech companies never see eye to eye with collaborative bank partners. Um, And it was an interesting stat that I read, that banks further have complex processes and infrastructures that contrast the fast-paced style of the fintech firms. These differences create cultural gaps and collaboration between these
Mhm.
two. So, you know, uh,
I agree.
okay, yeah, basically, I mean, that's it. Like,
I mean,
I
the
read
thing
it.
is, that's why
Is
you
that
find
really?
like that's why you're working with banks that are, first of all, in order to get the interchange, right, from your transactions that your customers make, the bank has to be under $10 billion. That's part of the Durbin rule, right? Any bank that's above $10 billion in assets is not allowed to share interchange. So that's why Bank of America and Citibank and those guys are not in this space. Either they have to find a different way to give the fintech credit and replace that interchange that they would have received, or they just can't be in the space because the fintechs can't afford to not get that.
And I'm sorry, you said 10 million or 10 billion?
Billion.
Billion. Okay, that's what I thought I heard. Just want to
Yep, 10
confirm.
billion. So like we were a 4 point something billion dollar bank at Bancorp. Meta's always been, and that's why banks in the regional space are the best partners because they're underneath that. What we're seeing more and more today are the community banks with banks that are $1 billion or less in assets are actually getting into the space more and more now. And what they're doing is they're leveraging partners where they could do like overnight investments of their deposits so that they can offload the deposits at night and not be over their cap tables, right? But still be able to support these fintechs, during the day because daytime limits are not monitored as much as the overnight limits, right? So that's part of it. The other part of it is the bigger banks are slow to move, right? They have more overhead, they have more risk, they have a lot more customers they impact if something breaks. It's funny when COVID first started and everybody wasn't going to branches anymore and they were all shut down. You watch TV and the commercials for the very large banks in the country. All of a sudden, mobile banking was a big thing. Like, guess what? We have a mobile banking wallet, and you could do your deposits online. And it's like, where have you been for the last 10 years? Like, fintechs have been doing this since 2006, right? So, it was something they never promoted because you had brick and mortar and people, they always banked on the fact that people would rather go to a branch. So,
It's so funny you mentioned that. I know, I don't remember what episode. It was earlier this year, maybe last year, and we just did like some random poll with the people that were commenting and said, like, when's the last time you've been to an actual bank branch? And people were like, don't know. I don't remember. Because I think it was a news article related to the amount
yep.
of branches that are closing down. And even locally where I live, one of the places I bank, their branch closed down. And it just, people just stop going. I mean,
Yep.
once you get used to doing things remote, then it's like, why am I even going anymore? Plus all the fintech apps and so forth and so
Well,
forth.
that's why people are getting comfortable with fintechs is because they had to anyway. They didn't have a choice. So COVID, helped the fintechs. I mean, it's a horrible thing to say, but it did help fintechs because people will then, since they had to be online anyway, they were looking for alternatives where maybe fees were lower and things like that, right? So, you need I agree with the article. I mean, banks can definitely be slower. They can have cultural differences. All the banks we work with, we make sure they understand that they really need to understand the culture of a fintech if they're going to be in this space, and that fintech is going to rely on them to be a partner and not try to fit them into a model or a mold of what they would do with their corporate customers.
I think it's just an interesting stat. In 2020, fintechs were at 5.47 trillion, while in 2017 it was only 3.4 trillion, some stat like that. And they're saying that the latest fintech stat is by um, 10.52 trillion by 2025.
Yeah,
On disruptive
absolutely. I
value.
mean, we're seeing it today.
I pull these stats, up obviously, but those stats are in line with what you're seeing.
Yeah, I mean, just us in general, just my team in general, we are getting requests daily now to help fintechs. I mean, back when you read my bio, we had like 15 programs, we're now over 30. And we have now 7 banks that we've helped get to market, and more are coming to us every day. It's just not stopping. I mean, the trends change. It used to be debit, right, and wallets, and now it's credit and lending and crypto and all that. But it's still there. I mean, it's just the products change, but the fintechs keep coming.
It's really interesting. I mean, crypto could be a whole other topic and
That's a
conversation.
topic in itself. Yeah.
Yeah, I like to get into it because like from we have episodes on crypto, and blockchain. I would love to pick your brain on the compliance side, what you're seeing.
Or
There's a
lack
lot.
thereof.
Yeah, oh yeah.
I mean, unfortunately, well, fortunately for the crypto community, there aren't any regulations that really are in place right now for it. I know Congress is looking at that, and we're part of some of those committees that meet with Congress on some of these like organizations we belong to, and they're trying to figure out how to control it and how to manage it. But crypto is a non-currency, right? And so it doesn't fit into any of the banking regulations today. But then you have like the mayor of Miami or the mayor of New York that came out last week and said, I'm going to issue crypto to everybody in my city. Like, what? Like, how do you do that?
Hey, let's figure it out. I'm biased. I'm 100% a fan of that whole industry and blockchain stuff. So, I'm excited for it. We had shows about what happened in Wyoming. I think that was the first
That was
that they put. That's a whole thing that they're doing out there with a decentralized organization is legal. Different things. We talk about that. So I'm a total fan of that. Listen, so I know we're a little bit over our time, but I just want to get some closing thoughts from you. From a fintech side, looking for a bank partner, just to like sum it all up. Some tips that we
so.
can leave the audience with
Yeah.
that are in that space.
So look for a partner that one is in the space that can give you the income that you need, like your interchange. So stay below that $10 billion mark, right? Two, make sure they offer the product, they can support the products that you want to offer. So there are banks that are just in credit, there are banks that are just in debit. If you want to do both, you don't want two separate banks. You need a bank that will support both. If you're just credit, then you may want to find a bank that's just in the credit space because they're more knowledgeable and have more experience in that space and probably can get you to market faster. Um, Look for a bank economics. Every bank prices differently. You got to make sure you're comfortable with the economics. And just because one bank gives you a pricing sheet doesn't mean that's how everybody does it. So if you're not comfortable with what you're seeing on the pricing sheet, either reach out to an advisor or somebody in the space that you can trust to see how you could go back and counter it, or get multiple pricings and compare them and go with the one, at the end of the day, go with the one that you feel, all thing else is barred, pricing and everything, that you feel you can have a good relationship with and sit down at a table and talk to as a person to person, and have them understand what you're trying to do and be excited about what you're trying to do.
I love the last part, excited. And that goes back into your what you said earlier about if it's just a pure money play and if how
Mhm.
can they well, I love that advice. I always value your insight and love when you're on the show. Can you tell people how to find you, what you do at
Sure. We're
iLEX?
in the process of actually redoing our website right now, but it's iLEX Group dot shit, I don't remember IO. Sorry, we're working with someone right now to have a group. So right now there's a landing page there. We're all on LinkedIn. If you see me, you'll see my whole team. iLEX Group does have a LinkedIn page, so you can go to our LinkedIn page as well. You can leave comments. You can see what we post out there. We're a member of a bunch of the committees. We were just at Money 2020. We're going to be at the IPA conference in April. We're going to be at FinTech Meetup, which is a sub of Money 2020. It's a virtual event, and that's in March, and we're always a part of that as well. And that's actually a great way to do some speed dating with vendors and banks and things. So if you're in the space and you're starting to look for that, look at FinTech Meetup. It's a great way. We were part of it last year, and it was amazing. We loved it. Short, sweet meetings with individuals all day long, and you just can learn to know each other, and then get other meetings set up outside of that. So really super cool. And as I said, I'm on LinkedIn personally as well, and you can always reach out to me.
In full name. We have it in the
Yeah,
bio, not on the thing right here, but Joyce Mehlman, and you can read our bio for the show, and you can find her on LinkedIn. It's definitely tagged in. As always, thank you very much.
no,
I
thank you.
wish you a happy Thanksgiving
You
next week
too.
and so forth. All right, so to the audience, you can also find us at techbehindfintech.com. Our site is launched. You can also watch the show live in the Tech Behind FinTech. It's a pop-up, a YouTube pop-up. Next week is a holiday, and so we don't know if we're just gonna come on real quick, and that's iffy. Keep everyone posted throughout the week. But yeah, it's a holiday next week. But yeah, it's always a great to have the show. Thanks, Joyce, for joining in.
No
For those
problem. Thank
viewing,
you.
thank you for the viewing. Have a great, wonderful weekend. Those that will view in the future, because that's how this whole thing works. You put the information out there. You might not see it live today. You may be watching it a month or a year from now. I thank you as always. Techbehindfintech.com. You can catch us in, and all our links are there. And we are out. Joyce, you have a great weekend.
You too. Have a happy Thanksgiving, everybody.
Cheers.
Bye.